Director of the Institute of Capital Market Studies, Nasarawa State University, and also a member of the Presidential Fiscal Policy and Tax Reforms Committee. We're looking at the insights into global windfall tax practices and strategies for optimizing tax benefits. So I want to ask for your first round of questions. Globally, windfall taxes have been implemented with arguably varying degrees of success. What best practices can we adopt to optimize the benefits of the windfall tax while minimizing potential drawbacks? How do these global practices compare to Nigeria's approach?
Yeah, thank you so much, moderator. Good morning, everyone. Good morning, my fellow discussants. Let me also say that it is my pleasure to be part of this conversation on the windfall levy. I choose to call it windfall levy. That's also the preference of the lawmakers when they were passing the bill. The views I'm expressing here are my personal views and not the views of the Presidential Committee on Fiscal Policy, because to the best of my knowledge, the windfall levy did not emanate from that recommendations of that committee. Let me also say that the goal of streamlining taxes and removing multiplicity of taxes is still being pursued. The work has not been concluded in that direction, and I'm pretty sure as soon as that is concluded, that will also be out to the public. The ideal idea is to reduce the over 60 different types of taxes, reduce them to not more than 9. So that is what the committee is working on, and that process is still in place. Let me also say upfront that I support the idea of the windfall levy. I want you to note that I've been calling it levy, not tax, and that's because of its peculiar nature. It's one-off, and it's not meant to, be a recurring thing. So I support it on the ground that it's not new to Nigeria. Just as you rightly mentioned, it's levy that we've also seen in so many other parts of the world. In the US, in the UK, for example, as far back as 1981, Margaret Thatcher introduced windfall levy on, for energy companies. And even recently, we have seen Rishi Sunak introduce windfall taxes at 25%, which has just been increased to 35% now in the UK. In Spain, we've also had instances of windfall tax, particularly on banks, but the rate over there is as low as 4.8%. We've also seen windfall taxes in other countries, Hungary, Slovakia, and Italy. Italy is one good example where it has succeeded. In Italy, we have windfall tax on banks. It used to be 10%. From 10%, it moved up to 25%. Today, the windfall tax, as at August last year, Italy increased it to 45%, the windfall tax on banks. In the entire Europe, the European Union, the European Commission also introduced windfall levy of about 33% for the entire zone. So the point I'm making is that it's a global thing, and it's usually as a result of sometimes actions or inactions of government or global developments. In Europe, for example, the Russian-Ukraine war resulted in a lot of supply chain bottlenecks, high inflation rates in the Eurozone. So central banks in Europe responded by increasing rates. And because of the increase in rates by central banks in Europe, a number of financial institutions in Europe, started declaring, huge extraordinary profits, which the government, decided to target. The windfall taxes traditionally have been usually on energy companies, electricity companies, oil and gas companies. But in recent time, we've also we're beginning to see them on banks, in particular financial institutions. But let me also say, part of why I'm saying this is levy. In the case of Nigeria, the windfall levy is not because banks' interest rates are up and banks are making, profits from the, interest income. The windfall levy is as a result of exchange rate unification, an action of the government, which now resulted in naira devaluation and which now also put a number of banks in a position to make super, profit. Now, by definition, you can say that windfall levy is any levy on the gain of a firm, okay, that is not as a result of the sweat of that firm, okay, that's as a result of the efforts of that enterprise. So it's largely on what is called, if you like, fortuitous gain or unlock. So where you have that kind of situation, or where a government policy has resulted in, winners and losers, in an economy, the windfall levy is usually used to redistribute wealth, okay, to get some from the people that benefited from it and to see how it can be used to, mitigate the adverse impact it's having on the others. That's essentially what it is. And that's why I want to see this windfall levy. I don't want to see it from the perspective of increasing government revenue. I notice that is one of the objectives, but that shouldn't be. The major objective should be to use it to cushion, the adverse impact it's having on vulnerable individuals and vulnerable businesses, the adverse impact of naira devaluation. So it shouldn't be from the point of increasing government, revenue. So again, I support it, but I am not in support of the rate. The rate is unusually high. Now, if you look at windfall levies across the globe, it ranges from 4.8%, especially for banks, 4.8% in the case of Spain, to 40% in the case of Italy. Well, that's the range, I was able to see. So I didn't see any country with as high as 70% windfall levy or for financial institutions. You can see 70% for energy companies. For example, in Slovakia, it is 70% for energy companies. In Ireland, it is 75%, but for banks in particular, you are not likely to see a rate that's as high as 70%, which is why I think I will suggest that the part of what should be done going forward should be to look at the rate again, to explore the possibility of reducing it to not more than 50%. I also think there are no clear guidelines on the implementation, and which should happen. If you look at the case of Europe, usually they come up with clear guidelines. The European Commission had very clear guidelines on the implementation. Now, the Act has a number of ambiguities in it, which will require some clarification. For example, the banks have asked the question, now, will this 70% levy be on their total profit, having paid 30% profit on their gains previously, or will it be on part? So there are ambiguities that need to be resolved, and that's why a clear guideline is required. I also fault the fact that it didn't emanate from wide consultation, with key stakeholders. There should have been consultation before, agreeing on the rates.
Well, let's get to Professor Uwaleke. How can the global standards and the principles around windfall taxes be tailored to fit Nigeria's unique economic environment? And how can the whole of government and whole of society approach be effectively implemented to ensure that the tax policies like the windfall tax serve as productivity incentives?
Okay, thank you once again. Well, before I address that question, let me say that I appreciate the recommendations being made here, and the concerns around the work of the Presidential Committee on Tax Reforms and Fiscal Policy. With respect to speed, part of why the committee, has yet to conclude its assignment has to do with the fact that it's not just about the federal government, the policies to do with the federal government. It also involves that of subnationals. So the streamlining of taxes that is being done also accommodates that of the states and local governments. So at the end of the day, as I mentioned earlier, it is the intention of the committee to recommend different types of classes, types of taxes that are not more than 9, single digits. Let me also say on the issue of global standards or global practices, what is clear when you look at what has happened in other jurisdictions is on the utilization of the windfall levy. There is usually specific. It's not more like a part of a general budgetary provision. You want to use it to plug budget deficit. That's not the intention. It's usually specific, and that is the what I will also want us to adopt here. And this attitude of having general objectives, to sources of fund, public sector sources of fund, has also not helped the trust deficit issue. If you look at even the recent bond we raised, the recent domestic dollar bond that was issued, $500 million bond. Yes, we know the size of the bond. We know the tenor as 5 years. We also know the coupon, 9.7. We know the minimum investment, $10,000, increment of $1,000. But that's all about it. Nobody told us about, I didn't read about the purpose of the, domestic dollar bond, what is going to be used for, or what projects that bond will be tied. And that has is something that has lingered, more like a legacy thing. If you look at our debt stock today, if you look at the instruments for raising domestic debt, for example, let me use that as an example. Now you will find that FGM bonds dominate. FGM bonds account for more than 70% of the bonds we have raised from the domestic market. And FGM bonds usually have a discretionary feature. They are not particularly tied to projects. If you look at the project-tied instruments, in that structure, is just less than 3%. Talking about the sukuk of 1 trillion, you have a domestic debt stock of maybe over 60 trillion. Sukuk is just 1 trillion. And then you have green bonds of around 15 billion. So the infrastructure type is just very insignificant, less than 3%. And when you borrow and they are not tied to specific purposes, okay, that's where this trust deficit thing is also one of the things that gives rise to trust deficit, because people cannot really point to what the loans have been used for. The same thing can also be said for external debts, where we have relied more on Eurobonds. Again, Eurobonds have discretionary features. When you take Eurobonds, nobody says you must use that for a particular purpose. These are the things that give rise to trust issues and trust deficit, which is why I want to strongly recommend that any money we are raising, again, given our huge debt burden, huge debt service to revenue ratio, any money we are raising must be tied to specific projects. So this one windfall levy that government wants to get, around 3.5 trillion naira, that's the estimate. Okay, should also be tied to a particular project that should go to assisting vulnerable individuals and small companies. And the good news is that at the level of our committee, fiscal committee, we also not just only recommending, making recommendations with respect to taxes, revenues, but we're also making recommendations with respect to spending, because it's about fiscal policy. Fiscal policy encompasses not just revenues, but also spending and public debt. So our recommendations are comprehensive, and I'm sure by the time they are out and the government begins to implement them, for me, it's going to be a game changer. Now, again, talking about global standards, I've talked about specific purpose, I had also mentioned that in terms of standards, what usually happens is that the rates are phased. Okay, they usually start from a low rate. That's the trend. You find most countries, they start from a low rate and then, graduate them, as time goes on. But in our own case, we just started, from a very high rate of 70%. So that's also why I think we should take a second look, at the rates. And of course, after engaging in a, stakeholder, meetings. Thank you.
Now let's get on to our Q&A session. We'll get comments and questions from our participants. We have the first one from Tunde Pampam. He says, what is the assessable period of this levy? And is this levy on both realized and unrealized FX gains? So I'd like Mr. Johnson Chukwu and Professor Uche Uwaleke to take this question.
Okay, thank you very much. The assessable period is 2 years, in line with global standards. It's 2 years, 2023 to 2025. And the tax base is on realized gain, not unrealized. In some jurisdictions, you have it on both realized and unrealized, but in the case of Nigeria, it's purely unrealized. And the period is 2023, from 1st January 2023 to 2025. I have information.
Okay.
Yes, information is so it's in line with
okay, Prof. Yeah.
Global practice. The retroactive nature, as I said, is in line with global practice. And remember, I also said that it's actually a tax on end reward. Okay, so I think that point should be noted. If you look at the banks now, one of the discussants mentioned it. The banks are still declaring profits even despite that. The banking sector, the last GDP reports, the banking sector grew by 29%, while manufacturing 1.28, agriculture 1.41. So you can see that some other sectors were adversely affected, while the financial services sector, a number of banks made gains. So globally, that's what happens. A means to redistribute wealth, not necessarily as a source of government revenue. Thank you.
Question will go to Mr. Professor Uche Uwaleke. It's from Adamu Zunu. Prof, you know that you've had an experience at the subnational level in governance. So the question is, how do we ensure that these windfall taxes do not end up being spent on recurrent expenditure, particularly salaries for civil servants?
Yeah, thank you so much. A very good question. You see, I think, for me, it's more like the common string. Every member of the panel is harping on the fact that there needs to be transparency, accountability, appropriate governance around the fund or the money to be raised. And one of the ways by which this can happen is by also involving the stakeholders, the banks themselves, in the management of the fund, and ensuring that the proceeds, again, I want to underscore that the proceeds are tied to specific projects that people can see. That also helps, of course, in monitoring and also in the assessment of the outcome. In some other countries, what we have observed is that usually in many of them, except for Italy, the targets in terms of what the government expects to get, is usually lower than what actually comes in. And that's most of the time speaks to, the faulty implementation. That is why I had mentioned earlier that it's important for the government to engage key stakeholders on the best way to determine, that's even the first point, the first step, to determine what this windfall is, and also put in place mechanisms for the proper utilization of the windfall. Now, on the issue of, it wasn't close to me, but let me quickly mention it, that part of why it is seen more as a levy is because it's meant to be a one-off event. And now the new national fiscal policy, which is what the committee is calling it, is going to replace the national tax policy. The national fiscal policy is more comprehensive, of course, has issues on spending and public debt, as opposed to national tax policy that is purely upon tax. So the national fiscal policy defines tax as any imposition that, of course, includes levy, any imposition on the part of the government, a compulsory payment. So as far as that fiscal policy is concerned, there is no distinction, no line of difference between a tax and a levy. They are the same. But with respect to this windfall tax or levy, the choice of word, in my view, is levy in the sense that it is not meant to be recurring. It's meant to be something that is one-off.
Much, and then to
please let me quickly add. Let me quickly add that anybody thinking of investing in bank stocks at this moment should be prepared to, do at least medium to long term. I wouldn't expect any investor to, especially if you're playing in the secondary markets, to think short. So such investors should be able to hold the stock for at least a minimum of 2 years until the end of the recapitalization exercise before we can begin to see reasonable appreciation in share price. We have seen if you look at where some of these stocks are in terms of their 52-week high, that will tell you that a number of them still, have these potentials, especially against their, their strong fundamentals, which, just as has been observed, should be what is, should drive any investment in those stocks.
Thank you, Prof.
Conversation. Can I have a minute?
Okay, just a minute. Yes, Prof. A minute. Yeah. Yes.
Yeah, thank you so much. Well, it's just to react to the impression out there that about the 10% VAT is largely misrepresented, in the sense that what the approach really is a whole of government approach. Yes, we are looking at the entire taxes, which are currently in place. I'm sure the chairman talked about the whole range of exemptions, ensuring that small businesses are no longer going to pay tax. That wasn't mentioned. So it's a whole, it's a package. Okay, so to analyze the or begin to talk about 10% would be to single it out. The danger of a single story is about a whole package that also involves other taxes. There is the plan to even reduce, going forward, the company's income tax rate of 30%. So I think all that, should also be in the front burner, not just the VAT thing. Then on the issue of getting unlisted companies or companies maybe in the informal sector to be within the bracket of the windfall levy, I think that may not be feasible or workable. Again, because from global experiences, windfall levies have been on large companies and large sectors like the energy sector, the banking sector, the electricity sector, the mining sector. Now, if you look at these sectors, electricity, mining, they're not doing well relatively in Nigeria. It's maybe the oil and gas sector, but the target of the banking sector is for a purpose, and that is because this is where windfall can easily be determined, can easily be captured. Again, that is what you find in other climes. Otherwise, the implementation may not be successful.
Now to Professor Uche Uwaleke.
Yeah, thank you. Once again, I thank you for inviting me to be part of this conversation. I'm also grateful to my colleagues, the discussants. It's just to say that going forward, there's need for engagement with the stakeholders to work out the best way to implement this, such that at the end of the day, the social benefits outweigh the pains. The pains by the banks. And I agree with Dr. Tilewa on the issue of the need to fix the economy so that every economic agent will benefit. Thank you.